Good morning. It's the 14th of September. Welcome to the latest instalment of Talking Ball. I'm Joe Neighbour from Signal Centre, and today I'll be running through the latest headlines in the market and an update on some charts. So, first up, we have an important set of US inflation data today, which is what all eyes will be on. That's been obviously a big talking point for a number of months now, as inflation has been rising, particularly in the US. And that's whether concerns whether or not there's going to be rises in interest rate or tapering of the asset purchase program. So all should become clear a little bit later. That's around about 1:30 or at 1:30, should I say? But in terms of more general news. In terms of the UK, with regards to the pandemic, they're getting set to roll out the latest booster shots for the most vulnerable people in the autumn. This is it's setting out a new approach to deal with the coronavirus pandemic, which obviously isn't going away anytime soon. The decision comes after an all-star team of scientists found that COVID-19 vaccines work so well that most people don't yet need a booster, which is good news for people that have been double vaccinated. In terms of what's going on more on the corporate side of things, Apple has said it patched a flaw that allowed hackers to gain access to its devices, even if users didn't click on malicious files, which is obviously a bit of a concern, but it looks like they've dealt with that now. Also, the tech giant is getting ready to unveil its latest iPhones and Apple Watch at an event today. Obviously, these are well-watched events, so keep an eye out for that later and see what impact it has on the Apple share price. In terms of macroeconomic data, particularly in the US, as I said, it's an important set of US inflation data today, figures that could help determine whether the Federal Reserve cuts down on stimulus and also whether there's going to be a rise in interest rates. The consumer price index data on Tuesday is expected to show an annual pace of inflation of 5% or more for the fourth month. Now, price pressures are also a potential problem for President Joe Biden and his $3.5 trillion social spending agenda, as concerns that such outlays might keep inflation elevated. So a lot to take in today. Obviously, plenty happening. We'll come on to the charts now and how things are shaping up ahead of this all-important number at 1:30. So let's just bring up the chart now. First up with dollar index. So this continues to trade in this bullish trend channel in the shorter term. Even shorter term than that, we had this corrective channel which broke up on the 7th of September, and since then prices have remained above that level. I wouldn't be surprised to see a retest down to this kind of level at some stage. If we look at price action yesterday, we did push higher initially, but then we actually closed back where we opened. So no real movement either way in dollar index on a closing basis yesterday, but intraday, there was a little bit of strength, but that was backed up with a bit of selling. So equilibrium on the day. Looking at where we're at this morning, down by 0.12% at the moment. So obviously seeing a bit of weakness there. If we look across the board at where the strength is at the minute, we're seeing quite a bit of strength from the UK today. That could be on the back of the data that we saw earlier this morning, where UK jobs saw a claimant count figure fall short of expectations. So again, coming back to things that Steve and I have been talking about over a number of weeks, in that at the moment it feels like bad news is being perceived as good news for the market, because it means we're going to get this continuation of loose monetary policy, whether that be through the asset purchase programs or keeping interest rates lower for longer. So let's take a look at euro dollar. That's moving higher today. And again, if we look at the flip side of what we've just seen on the dollar index, yesterday we did see selling, as you can see here. Quite a long wick on this candle, but we closed pretty much where we opened. So again, the battle between the bulls and the bears was an equal one, and we didn't really make any ground on the day. Pushing a little bit higher today. Ultimately, I'm still of the belief that a top has formed, or certainly in the process of forming, on euro US dollar, and that would obviously mean a bottom is forming on the dollar index, and therefore we can be expecting lower prices. So I don't expect any kind of push higher really in the euro dollar at the moment to be sustained, and expect it to be capped around this kind of region here, which is between 118.94 to 119.08. Looking at cable, that's up by 0.3% today, trying to threaten to break above this trend line again, which it's done on a couple of occasions now, but failed so far. Resistance has formed at 138.91, so if we can get above this level, then that could open up the upside in the short term. There's a lot of fresh air for this to move into. The first kind of resistance level we'll be looking for above that level would come in here at 139.83. and then if we can overcome that, then I would be hoping to see it move back up to this 142.41 level. But ultimately, I think we are expecting probably range-bound prices with with cable. But a breakout here could mean higher prices. One thing to note, just looking at this chart here, the rapid drop off in volumes, really. I know this is probably seasonal throughout the summer months. There has been a little bit of a pickup, but they're still not back up at these levels that we've seen previously from sort of July, along that that path there. You can see going back to sort of May. So maybe we'll see volumes up at that sort of level again soon, and maybe it'll occur if there is a technical move on the price action that encourages buyers or sellers to get back involved. Looking at the riskier assets like Aussie, for instance, we saw some strength yesterday, but we're seeing some weakness today. Ultimately, I think lower prices are to be expected here. We've got a massive band of resistance on Aussie yen between 81.65 to 82.00. And while that remains in case, I think it is a case of selling into strength on that one. And it'd be a similar situation for Aussie dollar. That continues to trade below these resistance levels between 74.05 to 74.50. And while that's the case, again, lower prices to be expected. If we look at New Zealand dollar, US dollar, that is pushing higher today. But again, into this sort of cluster of resistance levels that we've got on the chart. So I think upside probably is quite limited, particularly while we're trading in this kind of declining wedge or bearish channel. So I would be looking to potentially sell into that strength today that we're seeing. Looking at some of the other sterling pairs, we are seeing a big push higher in sterling Oz today. Continued weakness in Oz and strength in sterling combined. Quite a strong move up today, 0.65%. That seems to be the leading currency pair on the day. Let's flip over to cryptocurrencies, just to have a quick look at Bitcoin. Obviously, from this impulsive move lower and this break of the short-term trend channel, the price has been unable to recapture the highs that we saw there. So price is sort of stabilizing really around here. We did see a bit of weakness yesterday in quite a large range actually on the session comparative to the ranges that we'd seen over the last sort of 4 or 5 sessions. Big support for me at 42.830. If that level fails to hold, then I think this corrective move lower on Bitcoin is likely to continue. If it doesn't, then I think we need to see more consolidation probably above that level before we see a renewed push to the upside. So I think the risks are to the downside at the moment on Bitcoin. Looking at oil, oil has broken out of this corrective channel that we've been speaking about. It's overcome these resistance levels that we had drawn on the chart. And now what that should do is open up the upside for a continuation higher over the short to medium term. So arguably what you could call this now, given the strength of this uptrend, is potentially a corrective flag that's formed, and therefore we would expect a continuation higher in line with the dominant trend. So the dominant trend is clearly bullish, and we are seeing pressures on the oil price. As we mentioned on a couple of videos ago, there was a report from some of the big investment banks that believe there's going to be a big rally in the price of oil over the autumn months. So certainly looks to be shaping up that way. The technicals are matching up as well, so it looks like further upside is expected now on oil. In terms of the first targets on the upside, we've got to be looking for these previous highs up at 76.35, but for me it's got potential to go probably a lot higher, which is a concern. Rising energy prices are being seen across the board, and that is ultimately going to pinch our pockets over the medium to long term. Looking at gold, not really much going on here, as I've been saying for the last few episodes while I've been covering gold in Steve's absence. It's trading within this corrective channel. In the very short term, price action is very range bound between sort of 1758 to 1834. Not really much happening here. Doesn't seem to be any kind of impetus either way. I think ultimately the long-term trend remains bullish, but we need to see it above 1834 to 1845 in order to see a continuation to the upside. So for now, expecting more range-bound prices in gold and probably limited opportunities if you are looking to trade this on a short-term basis. You may want to flip your attention to something else that's got a little bit more going on a momentum basis and with some larger intraday ranges. Okay, let's flip over to the indices now. Started to look a bit interesting here as well. Potential threats of a corrective move in some of these bigger indices. So this is the FTSE 100 to start with. We broke trend, as you can see here. This was the trend line that started back in October. So this sort of this one here that I've got drawn on. We broke that on the 8th of September. We've got a key low here from the 19th of August, which so far has done a job of support. But if that breaks, then we'll be looking for a move back down towards this support line at around about 68.11, which is this key low here that we posted on the 19th of July. And that's probably going to marry up also with this uptrend line, which actually goes back to the start or at the height of the pandemic, when that fear really set in the equity markets and those key lows there. So that could potentially be a third touch point for that trend line, which I think would be quite pivotal. If it fails to hold, then we'd be looking for an even deeper correction on the FTSE 100 down to this 38.2% Fibonacci retracement level, which at the moment, I know it's a bit difficult to see in blue, comes in at 65.68. And I think ultimately, if it does get down to those levels, that would be seen as quite a healthy correction. If we take a look at this sort of reaction high off the back of the initial move up from the pandemic lows, and then it comes in at roughly the same sort of level as that. So there should be good support around there. And I think anybody that's got money to put to work or has been looking for markets to pull back in order to get involved in financial markets, that's the kind of area that you'll start to see new money coming in. So let's look at the DAX. That's not faring as poorly as the FTSE 100 today. But interestingly, this did actually break below that key swing low from the 19th of August. We're back above it at the moment, so price is expected, I think, to be quite choppy here. I think now we could probably readdress that and put that there as the key level to watch. That was the key low that we posted on the 9th of September. If that level fails to hold, then the next support line below that is down at this swing low from the 19th of July. And then if that gives way, we're looking down here for a fairly deep correction down towards that 38.2% Fibonacci level. Again, likely to attract fresh money, I think, and ultimately we would still be in an uptrend down here, and things would be looking a lot healthier from a value perspective. So keeping an eye on these key levels for now. Nothing to get overly concerned about at the moment, but keep a very close watch on these levels. 15,450 on the DAX is the first level. Then below that, we have 15,045. If that level gives way, then I think we could see a pickup in selling activity and a drive down to maybe the sort of 13,000 level on the DAX over the medium term. Looking at the US markets, obviously these things have been holding up tremendously well, and dips tend to be aggressively bought. This is the Nasdaq. We have seen one, two, three, four, five, six, pretty much 6 days of decline on the Nasdaq, which you don't often see, if I'm totally honest, but it is getting very close to this potential trend line that we have. We've got 2 touches on it at the moment. A potential third incoming very soon. We've got some horizontal support of 15,183. For me, that's the sort of key pinch point. If it fails there, then it could spark a bit of a corrective move lower. The next sort of major support levels or band of support that I've got is between 13,884 to 14,066. Yes, it might feel like a bit of a whack to your portfolio if it does break those levels, but let's take this into context of where this has been over the sort of long to medium term. It's come a very, very long way. And ultimately, it would still be an uptrend down here. This would just be a healthy pullback within the grand scheme of things and allow some value creation within some of these big tech names that everybody wants to own. So let's keep an eye on that for now. We are getting closer to a test, it would appear, of this trend line on the daily chart. S&P 500, the broader index in the US, 500 stocks, as I keep saying. If you want to get an idea of what the health is of the US economy in terms of a stock market perspective, S&P is the place to go. We have broken trend here from these lows that we posted back in October last year. And the trend line and the sort of wedge formation has sort of been narrowing a little bit. So price action has been coiling within this and getting narrower and narrower. We have seen a break of the trend line, and we did that on the 10th of September. And then we formed some resistance at 4,486, as you can see there. We did see a retest of that yesterday and a retest of the underside of this broken trend line, and the sellers sort of stepped in. Yes, it was a positive day yesterday, but we are seeing a bit of weakness today, down by 0.15%. So for me, we could be in the process of early stages of a correction here in the S&P 500. The next support level down for me is at 4,352. Again, bringing things into context here, it's had a very, very big move to the upside, and there are a number of horizontal support levels to watch for on the downside, any of which ultimately would probably still be in a bullish market, and just a corrective move to allow some value to be created in some of these bigger names that people want to own in the US. So I don't think it would be a case of hitting the panic button. But if you are in US stocks and heavily exposed, you may want to think about trimming some exposure here, because a correction cannot be ruled out. And really, we haven't seen any sort of correction of any magnitude for a number of months. So, you know, factor that into your thinking, and maybe, we're waiting for a catalyst, and it could be this inflation figure later today. Dow Jones, just to finish up. So again, this has seen a break of trend. This isn't as broad as the S&P 500. Obviously, the Dow is only made up of 30 constituents. We have seen a break of trend here. We have seen a retest of the underside, and we've seen it fail. We did see a decent sort of bullish candle yesterday, forming in line with this swing low that we posted on the 19th of August. If this breaks, then we'd be looking for the next step down, which is at 33,746, and then into these key levels down here between 33,029 to 33,231. So again, in the grand scheme of things, just a healthy correction, a healthy pullback to allow people to get into some of these big US names, and retop up their portfolios. But again, same thing applies. If you are heavily exposed to US stocks, you may want to consider trimming some profits soon. Lightening up a little bit, and giving yourself some cash to play with if there is to be a pullback for you to take advantage of. So that's it from the market front on the tech side of things today. Obviously, we'll run through these markets again tomorrow. Gun to the head challenge from yesterday. So interestingly, I did pick the S&P 500 yesterday. That was my gun to the head trade. I made 11 ticks, or 0.53R. There was a big rally around about 8 o'clock, between 8 o'clock and 9 o'clock, so really into the close. Otherwise, that would have been looking far nicer for me. Let me just see if I can bring up the chart from yesterday. It was an hourly chart that I did the trade on. So I sold it yesterday around these levels, just in here. And as you can see, it got quite close to my target down here at these lows. So at 8 o'clock, we saw that really big rally up, and that ate into a lot of the profit that I'd made on the initial call. But this was the resistance level that I was talking about, which came in at about 4,489. Did a pretty good job, posted a quite an aggressive reversal candle there, and we did see lower prices. But as is often the case with the US, the dip buys are pretty quick to step back in. So what am I going to do today? Well, I don't know is the answer. Let's have a quick flick through some charts and see if I can see anything that takes my fancy. So flicking through some of the Aussies at the moment, they I think ultimately look quite weak. I'm not sure I want to be buying any of those, and there's nothing really that stands out as a sell. Dollar index, nothing there for me. Euro is having a pretty strong move. Euro Swiss, is that breaking out above those highs? It's not quite there yet, so nothing there on a breakout trade at the moment. Big move on Euro SEK, not sure what's happened there. Okay, what have we got? I'm just looking really for a candle that sort of grabs my attention. Okay, what's this looking like? So I'm bullish of US dollar. This is US dollar Swiss franc. Looks like it's trading in a bit of a range. Maybe not. Not much of a gun to the head. I'd probably be dead now if someone had the gun in their hand. What have they got? Okay, let's go with one of these US indices again, just because I like the story there. So S&P 500, we've seen the break of trend. I think I'm probably just going to go with that again just to keep things easy and try and be a bit more prepared tomorrow. So going to sell it here at 4,470. Stop loss above those swing highs that we posted yesterday, so 22 ticks. I need to get a fairly decent target in to make it worthwhile from a risk reward perspective. So let's go for 44.25, looking for just over 2R on that one today. So looking for a continuation lower in the S&P. Feels a bit risky given that we know how US participants love to buy the dip. But obviously we've got this inflation figure later, which potentially could be a catalyst for a deeper correction in the US markets. So let's see. Okay, day ahead. What do we got? Inflation obviously front and center. Prices expected to rise 0.4% month on month from 0.5%, and that will take the figure to 5.2% year on year from 5.4%. So expecting a little bit of a drop off in the inflation figure for this month. So let's keep an eye on that come 1:30 this afternoon. That's pretty much it from me. Hopefully that was insightful for everyone that was watching. I'll be back tomorrow for the debrief from the inflation figure in the US and see what impact that has on markets. In the meantime, trade safe, guys, and have a great day. Goodbye.